Welcome back to Smart Money on CNBC-TV18. Well, we have with us Anupam Guha, who is the head of private wealth management at ICICI Securities. And here we are trying to build a model portfolio for you so that you don't have to do all of the thinking. We're going to tell you how to approach large events like the elections, which are upcoming next year, as well as perhaps the start of a rate cutting cycle. So, Anupam, before the break, very helpfully you told us about all the factors that are leading to these big events. But now let's get down to the brass tacks, right? Because that's what our viewers want to know. How do you build a model portfolio if you're a growth client, someone who's a growth investor, someone who's younger, between 20 to 35, and what are the mutual funds that you would recommend?
Sure. So, for a growth client, Sonia, really one is that it needs to have, from a strategic perspective, almost 80% in equity, right? And within equity, given the valuations, right, be it large cap, mid cap or small cap, all seem to be fairly valued at this point of time in terms of their long-term averages. So from that context, my suggestion would be, and I'm going to maybe first cover, the large cap, mid cap bit, and then maybe specific, funds. Almost 35% should be at least in large cap-ish. And there our suggestion would be, at least, my view would be that you play it either through index funds or ETFs. Because, in large cap, it is better that you look at expenses and try and kind of mimic the market, so to say. And hence, index funds and ETFs work best. In that, you can pick any of them, say an ICICI Prudential, Nifty ETF, or an SBI or an HDFC. All works good. Right. In terms of adding more, I think flexi cap as a category looks very good. Almost 75% of money is in large cap, with tactical, 25% between mid and small cap. So really, there, rather than for a investor doing those tactical call, really the fund manager is able to do that. And in flexi cap, you have actually, Canara Robeco, say for example, flexi cap fund. So between these two, the ETF and the index fund and the flexi cap fund, almost 35% of allocation can be there.
You have hybrid funds as well. That's the ICICI Pro multi-asset fund. Yeah.
So if I were to just to complete, right? Apart from that, you have the small and the mid cap. Yeah. Over and above that, once you've built a 60-70% allocation, typically from a tactical perspective, you have 20%. My sense is one can really have 20% in thematic funds and 20% into, because election also brings in volatility, right? And a multi-asset fund, we just saw, right? It really blends in good because it toggles between equity, debt and alternate, right? So it is also, for investors who would want to take a debt allocation today, given the taxation. So while from a young millennial, etc., the taxation could be on the lower side. But I'm saying even then, right, it is good to have a multi-asset as a category because it really fits in. Also, I would say that on the thematic side, right, and, some of the sectors that we just kind of spoke about, banking looks very good. As a country like India where, you have so much of growth coming in, banking is a surrogate to really play the full India story. Also, banking is another surrogate to play the infra story because, typically banks would lend, and that's how you, be it real estate that you spoke about or infrastructure, it becomes, a great way to look at this thing. So a banking fund should definitely be there. Given
I noticed you also have the Tata Infrastructure Fund. I want to jump in there because, a lot of savvy investors believe that you should stay away from thematic funds because as an investor, perhaps it will be very hard for you to time these funds, when to get in, when to get out. And then suppose you forget and you don't have a savvy investment manager for you, then, you might just burn your fingers on the longer term. Would you agree?
Yeah, I would agree. I would agree that if you are a buy and hold investor, then it is best to move into the flexi cap kind of strategies or multi-asset strategies, depending on, what is your preference. Because here, the fund manager is going to toggle between, various asset class in multi-asset or in flexi cap between various large cap, mid cap, small cap. Also, you have the dynamic funds, which is, say, for example, a balanced advantage fund, which toggles between equity and debt, right? And depending on the market valuation, one can really look at building a portfolio. Now, for investors, I think it's very important to understand that, you know, if you want to increase your alpha, right? Finally, one is to really preservation of wealth. The other is, you know, in terms of creating those
alpha generation,
you know, higher return. You may want to choose, like election as an event, to play some of these themes. But if you think that, no, listen, this is not my cup of tea and I do not have the time or the bandwidth to really look into it, then maybe, yeah, I agree with you, Sonia, one could just stick to the basics.
Okay, let's do one thing. Let's also get some queries on board now. I guess my director will just put them up for us on the screen. We have lots of queries coming through from many of our, people who follow us, write into us. There's the first one from Susanna Paul, who says, could you give us some suggestions in debt fund category? Because there are so many debt funds and it gets very confusing. This I agree, because, this is a slightly difficult area to understand as well for a common investor. What would your recommendations be?
Yeah, so on the debt side, our belief is that we are almost near peak in the interest rate cycle, which essentially means is that if you today invest, there are two components, there are actually three components to the investments into debt, right? Conceptually, I think investors should know. One is the concept of carry, which means that if you invest into a paper or into a fund, there is a certain yield or a return that one can expect. Right? It's like an interest rate. So say, for example, today for a paper which is between, say, 3 to 5, one could look at a carry of anywhere between 7.5% to 8%. And if you believe that interest rates were to come down over the next few quarters, then you also have the benefit of the duration play, which means that you really can, get capital gain, like how you have it in equity, because interest rates and bond yields are inversely correlated. Any names that you want to suggest? Yeah, so my suggestion again would be that, like how you mentioned on people just want to buy and hold type, there are dynamic bond funds. Now, what does a dynamic bond fund do? That's a name of a category. You could have an, ICICI Prudential Dynamic Bond Fund, an SBI, an all seasons fund from ICICI Prudential or from HDFC, any of the, large players in the debt side. But really what's the play is there is basically playing the, short term as well as the slightly medium term in terms of interest rate. The other thing that, investors should look at when investing into debt is really from a taxation perspective. Okay. If you are in the lower tax bracket or tax is not a consideration, then it's very easy for you. But, in case if people have, are at higher slabs and marginal rate is now applicable, you may also look at some of these, multi-asset kind of a strategy, because it then, now with the new, regulations that are there, up to 65% equity, it is equity, and less than 35 is, marginal rate. But between that, you really can have, debt taxation with indexation. Got it. So one could also look at, multi-asset as well. Okay, got it. We are getting a lot of queries. Let me take them very quickly. Omkar Vyas has written to us where he says he's added an electric vehicle thematic fund, which is the Mirai Asset Global Electric and Autonomous Vehicle Fund. And he wants to know if he should stick to it or he should, move out. So, again, I'm saying the personal advice in personal finance, right? It's very important for one to know why one has invested into, right? So to Omkar, my suggestion would be that if you have just recently invested and you've gone with a purpose, let that story play out. But on an overarching basis, it's great because it's forward-looking, right? We all know the emission norms and how, the entire transformation that's happening in the automobile space, so it looks good. And it looks good. Okay, so you may want to perhaps hold on to that, Omkar. Right. Shreyas Rao has written to us where he says, what's the portfolio advice for college students? What percentage of portfolio to allocate where? So, just make it crisp for us, right? How much should you allocate as a college student? And give us 2 or 3 top funds that one should look at. So, the model portfolio that I just kind of spoke about, right? So, if you're a college student, I think I'm assuming that you have a long-term horizon, you have the ability to take risk, and hence my suggestion would be to be a growth-biased investor, which means almost at least 80 to 90% should be in equities. Within equities, the suggestion is that be into large, mid, and small, the entire category. If you do not have financial acumen or this thing, then just stick to those flexi cap type, which is going to be long-term in nature. If you can play tactical, thematic stories, then we believe that banking and infra is something that you can add.
Okay, let's revisit the names then finally before we end. The top 2 large cap funds, top 2 mid cap funds, and the top 2 hybrid funds that you like.
Sure. So on the large cap bit, my suggestion would be go for an ETF. You could pick up an ICICI, an HDFC, and SBI, any of UTI, any of those large ETFs to invest into, or an index fund, which is say a Nifty 50 index fund, again from any of these large names. On the mid cap side, you have the Kotak, mid cap fund. You have the NRI mid cap fund, so you could look at those as well. And on the short term, again, you have one from Kotak, specifically on thematics. You could look at the Tata Infra or the Nippon
banking fund, the Nippon banking fund
Nippon
that you
fund,
like.
yeah.
Okay, all right. We've run out of time, not out of questions, but thank you so much for joining us. It was really a pleasure speaking to you, and hopefully we will get to chat yet again on many more topics.
Absolutely, Sonia. My pleasure, and thank you, and thanks to our investors.
Okay, thank you to all our viewers as well. You can keep giving us feedback right into us, and with that, it's a wrap on this edition of Smart Money. Thanks for watching.